Okay, good morning. So, first of all, I want to thank, all the organizers of AIFA for inviting me here. It's always a pleasure. I think I've attended almost all the events. I think last year I was not here. I was outside the country, so I missed it. I was thinking that I'm coming on the last day on Sunday morning, so everybody would have gone home. But I'm very grateful to all of you. There is still, everybody is still here and the energy is very, very high and everybody is very engaged. So I'm sure that, all the speakers, organizers, everybody has done a great job in keeping you engaged and keeping you motivated, right? So I think first of all, we should give a hand to all the speakers till now and all the organizers. My compliments to everybody. Uh, you should not count the 1 minute when I'm praising you only. That is also gone. So what I'm going to do is that, there are some slides, there is some data that I want to share with you. But basically, I'm going to speak about the market, how to invest in the market right now. Before I start the presentation, I want to tell you two or three things. First, in the last at least 1 year now, at least 1 year, it may be longer, but what I've seen is that in the last 1 year, there are a lot of people who have been waiting for market to fall. Correct? How many of you are waiting for market to fall? Everybody. Huh. So you must be knowing that when everybody is waiting for market to fall, it will not fall. That is the market. Correct? But two, three things I want to tell you. So there's one guy, he in 2023, October only, or November sometime, he came on TV and said that if you give us money, we will not invest, we will keep it in cash. Okay? So that person was in cash since 2023, right? Now what happens when any fund manager goes on TV and says that market is very high, we will not invest. So he has gone and said what he want to say, rest of us start getting calls. What do you think? Okay. So what happened was some 19,000, 20,000 index, people are waiting for market to fall because first time they are seeing 20,000, correct? Then market keeps going up. Then 4th June came. So on 4th of June, what happened? Briefly, market was down 6-7%. So these guys are also very smart. When the market falls, they know whom to call. They'll remember, that fellow said last year, market is very high. उसको ही बुला के लेके आया 4th June. So 4th June, that guy come on TV and says, I told you it is going to fall. Arey boss, when you said it will fall, it was 20,000. Now it is 24,000 and it has fallen 5%. Huh? What is the point? Correct? That also it has fallen for 2 hours. After that, 26,400. Still people are waiting for correction. Now, two, three things I want to tell you. First thing, please remember this. Every year, listen carefully, every year, once, from the highest point, market falls 15%. It happens every year. This year it has not happened yet. समझ में आया? अभी तक गिरा नहीं है. So, every year, I'll repeat now, every year from the highest point, at least once, the market falls 15%. It happens every year. This year it has not happened. Only 2.5 months are left. It might break the record, I don't know. But that is the negative part. I'll tell you the positive part. Every 18 to 36 months, somewhere 1.5 to 3 years, market makes a new high. You understood? Every year once it falls 15%, and every second year or third year it makes a new high. That is how the market works. Sorry? That is the motivation. So don't waste your time predicting when the market will fall. You know why? Because people who develop technology, people who make your apps and websites, they understand it's a feature, not a bug. If market falls, there's nothing to wait in anticipation. It falls every year, boss. And if it makes a new high, there is nothing to get surprised. Oh my God, see what has happened. It happens every second year. This year, the new high was 26,400. In 2023, the highest point was 20,000 after state elections. In 2022, it was November 2022, it was 18,900. In 2021, it was October 21, it was 18,490. In 2020, it was end of 2020, market crossed some 13 and a half or 14,000. So every year or 2 years, it makes a new high, and every year it falls 10 to 15% down. Correct? Most of your clients are either investing regularly or doing SIPs. Like we had published one SIP report. Some of you may have read it. We had published one SIP report. I want to ask you one question. Let us say there is person A and person B. There are two people. Okay? There are two people. There is person A and person B. Both are doing SIP for 10 years. They are starting SIP for 10 years. Okay? Person A, when that person starts the SIP, you meet that person after 5 years and ask him, how is it going? What is happening? He says, 5 years have gone. I have put 60 installments. My IRR is below 8%. It's bakwas. I'm not getting any return. Then you go and meet person B. And the person B, you say, okay, after 5 years, how is it going? How is your investment going? He says, it's a fantastic investment. In first 5 years, I was thinking I'll do SIP for 10 years. In first 5 years only, I am getting some 15% compounded. So both person A is unhappy after 5 years because return is below 8%. And person B is very happy because return is very high. Now 5 years is over. They've done SIP for 10 years. You go and meet them after 10 years. After 10 years, who do you think will have a higher return? Now let me tell you one simple arithmetic. Whenever somebody does SIP for 10 years, the person who gets a poor return in the first 5 years will get a higher return at the end of 10 years. And the person who gets a very high return in the first 5 years, his return will average down in the latter part. Because that is how SIP works. If you are doing 10-year SIP, you have 120 installments. What is the ideal thing you want? Up to 119 installments, nothing should happen. In the last month, market should go up 500%. That is what you want. Correct? So don't waste your time in forecasting market will go down. If you are watching TV on mute, please keep on mute only. Lot of people will come and say, oh, market is very high, it is going to fall. That is for all the FNO traders. If market falls, it is good for you. Don't waste your time. And I'll tell you one simple thing. In our business, just remember this. Even in our business, there are a lot of MFDs, there are a lot of advisors, a lot of producers, friends are there on Twitter. They are also saying, I have told my clients not to put money. Sir, I will not name the names, but you know somebody is on cash. Your friend on Twitter. In cash since 1 year, telling people not to put money in equity, saying that Indian market has gone mad. When we are offline, I'll tell you the name. But anyway, it doesn't matter to me. Simple thing. See, if any of you, just think of this. If any of you goes to clients and says, sir, take 30% out, book the profit. And if you have money, you wait. Don't put now. Market will fall. Let us say 10 people, let's say you have 100 customers. But 10 of those customers you have said, don't put money, market will fall. From next day, what are you going to do? Now you know what happens from next day onwards. If market goes up, you are unhappy. Imagine, you were somebody happy, cheerful guy, made a lot of money because market is going up since 20 years. Now you have created one line in the sand. You've decided market has to fall. Now because 30% is lying in cash, Every time the other 70% goes up, you are unhappy, right? So let me tell you one thing. You manage your client's asset allocation, you manage the risk in the portfolio, you don't bother about the market. The day you decide market is expensive, it has to fall. From next day, you will not be able to work. Every morning you wake up because you made that pronouncement. Now you have a confirmation bias. Now you will not get आपको चैन नहीं मिलेगा अगर if the market doesn't fall, you will be unhappy because you've gone and told 10 people it is very high, it has to fall. Now it is not falling. Now you are not able to concentrate. Every time market goes up 1%, instead of being happy, you are unhappy. Correct? So you manage the risk in the client's portfolio and you manage the asset allocation. You don't try to manage the market. Also, let me tell you one more thing. The risk is in the client's portfolio. Risk is not in the market. Market will do what market has to do. Where is the risk? You tell me, where is the risk? Like I'll give you an example. Lot of places I go and then people ask me, what do you think about the market? So I tell them it's gone up a lot. Every year it falls 10-15%. This year it has not fallen. Simple things, correct? So I tell them, but why are you asking me? Don't ask me. I will say the truth, you will not give me money. But then you will go and put money in thematic fund, small cap fund and mid cap fund. Then why you are asking me? Correct? See what is happening in the industry today, right? Just take one few, I'm not going to run all the slides, just skip some of these things. See what does this data actually tell you? Look at this. This is net flow and this is gross flow. What does it say? After putting and removing money, 40% of the entire industry's money is going into thematic funds. Okay, then after this, you add small cap, that is 10%, so 40 plus 10, 50. Then you add mid cap, that is 8%, so 50 plus 8, 58. Then you add multi cap, which is 11%, so 69. And then you can add, some other large and mid cap, half of it you can add. So 74% of the money is thematic fund, small cap fund, mid cap fund, multi cap fund. Okay. Now I'll show you something interesting. See the data on the left. If you see the market capitalization, if you see 500 stocks, BSE 500 market capitalization, what you will find is the first column, on an average, 65 to 70% of the market is large cap. And on an average, 35% of the market is small and mid cap. Now let's go back and see how much money is there in large cap. How much money people have put in large cap? Just read how much money people have put in large cap. 4% of the net inflow. Only 4% of the net inflow. You can add from large and mid cap, it is 4 plus 5, 9%. You add flexi cap is only 9%. So 70% of the market capitalization is large cap. But how much money people have put in large cap? 17-18% of the net inflow. So now you understand this. Let me give you two examples. You watch, we are in Kerala, so you must be watching football, you must be watching soccer, no? You watch football? I have a very difficult question for you. In a football match, 90 minutes match, 90 minutes, 45 minutes, 45 minutes, very difficult question. Tell me, out of 90 minutes, 70-75 minutes of the game, where is the ball? Midfield. We are talking Brazil versus Argentina. We are not talking Brazil versus Nepal or something. If it is a good match, 75 minutes ball will be, they put ball possession, right? The main thing is to keep the ball possession. The ball is being passed somewhere in the center. Have you ever seen a game where the game is being played 75 minutes in some fellow's penalty area? What will happen? You are trying to score a goal, that fellow will go score a goal on you and go away. Why is a football match for a good side? Why is a football match midfield 70% of the times? Because that is where the game is played. Correct? Where is the game being played here? You are only thinking how to score a goal. You are not even imagining that other fellow can score a goal on you. Right? Now, okay, let's say you don't talk about football. We talk about typical meal, right? You have a thali, you have a meal. In a meal, where a plated meal, like a thali, if this is a thali, in the center, especially here in Kerala, what is the biggest proportion? What is the thing which you find in the center the biggest? Rice. Where is the pickle? In the corner. How much proportion of the plate does the pickle occupy? Little 5%. Somebody said 10%. सबको अल्सर होने वाला है इधर. You're going to be careful. All the SIP has to compound. Be careful. Now you close your eyes and imagine a thali where you're used to seeing rice, there is pickle. And where you're used to seeing pickle, there is rice. What will happen? At 10% only are declared ulcer. Instead of rice, if you put pickle, what is going to happen? I didn't say, he's saying. So see, let's understand one thing. That is why I said at the beginning, the risk is in your portfolio, not in the market. Market is doing this. After all the rip-roaring rally, still small cap is 19% or 20% of the market. Then I'll give you a few more examples, correct? Everybody says market has gone up a lot. So first thing I want to tell you, so just to recap quickly, first point, the risk is in your portfolio, not in the market. So don't try to predict where the market will go. You see what your client is doing. In last 3 years, in all the clients' portfolios, small and mid cap exposure must have gone much higher than what it was intended. Correct? All this defense, manufacturing, railway, infrastructure, PSU, all that exposure must have gone a lot more than what it was. But let me tell you, 50 to 60% of our market is still the bank, IT, consumer, pharma, all those things. Correct? So that's why I said the risk is in your portfolio, not in the market. You see your client's portfolio. In last 3 years, what would have happened? The things which have outperformed, their proportion goes up. Second thing, clients have a habit. They will put money where it has outperformed. So the weightage will go up even more. So if you think of a football match, you have to bring the ball back in the center. Correct? That is something, and you have to change the equation of pickle and rice. That is the thing to keep in mind. Now coming second point. I started off by talking about the market. A lot of people are saying market is expensive, etc. I don't believe in these generalizations because our job is like this. You will see your client's asset allocation and decide what is to be put in which equity fund. Let us say the money lands up at my table. Your intention is to put money into equity. So our belief is simple. We always assume market is fairly valued. Our job is to look at where the relative undervaluation is. Our job is to make a portfolio which will help us to beat the benchmark. Correct? Now, a lot of times what people are doing, you and your client has decided that equity has to be 40%, debt has to be 60%. Example. Once you give that 40% to me, I am sitting on 30% cash. What will happen now? Client's portfolio is 28%, not 40% equity. Once somebody asked a very difficult question. The question was, how do you defeat Vishwanathan Anand? What is the answer? How do you defeat Vishwanathan Anand? What is the answer? You play something other than chess. Correct? Don't play chess with him, play something else. You heard this or not heard this? Now, if this same logic you apply to an equity fund manager is supposed to beat the index by doing better stock picking or differentiated stock picking. He's not supposed to beat the index by buying another asset class. It's the same thing. If I tell you you have to beat the equity index, you say, okay, I will not buy equity. Correct? You got it? Lot of people try to beat the market. Lot of people are trying to beat Mr. Vishwanathan Anand by challenging him to play carom instead of chess. It's not the right way to do it. One guy tried to beat him by using a computer. You saw what happened afterwards. Correct? So you are supposed to beat the index by doing differentiated or superior stock picking, not by predicting. Market predict करके क्या मिलेगा? हर साल 15% गिरता है, हर साल new high बनाता है. What is the use? Correct? And anyway, you all are SIP investors. They are actually better served if the market falls. So don't waste your time in forecasting the market. You see the risk which is there in the portfolio and try to reduce the risk of the portfolio. Because in last 3 years, forget what will happen to the market. In last 3 years, the risk in people's portfolios has gone up. So you have to reduce the risk. How do you reduce the risk? If somebody is too much into small and mid cap, you bring it into large cap. If somebody is too much into all these fancy themes, you tell them buy more simpler things like banking or IT. If somebody is too much into equity, you get them into balance advantage, right? So reduce the beta in the portfolio, reduce the risk. That is important. Now, few moments back I was talking about the market. Now, most people who say that market has gone up a lot, right? Most people who say market has gone up a lot, they are somewhere basing their reference point from bottom of COVID. Willy-nilly, knowingly, unknowingly, in a lot of people's mind, market has gone up a lot is coming from COVID. Because, some very famous guy put on social media and came on TV also. He said that most bull runs last for maximum 4 years. This bull run has finished 4 years. In fact, in the 4 years, market has gone up 3x. Right? So, now tell me something. Has the market really gone up 3x? Meaning, if you see March 2020, Nifty went to some 8,700, right? From there, in 4.5 years, 8,700 has become 25,000. So it has gone up. It has gone up 3x. In 4.5 years, it has gone up 3 times. But the question is, should you look at the market from the bottom of COVID? Should you look at it from the bottom? So before the event of COVID impacted us, before that, on 20th February 2020, Nifty was 12,490. Then in 1 month, it fell by about 38%. Now tell me something, when it fell by 38%, see wherever the market goes, at any level, the market is discounting something. At any level, market has some expectations, right? When it was 8,700 at the lowest point, what was the expectation in the market? और गिरेगा बराबर है, लेकिन what news, what was the expectation, what were people worried about? Worried about life. So let's build on what Dipesh said, that people were worried that the case fatality rate of COVID will be 5%. See, I'll tell you one thing, in our profession, knowing index level is important. But apart from knowing level of index, you should also know that when index went to that level, what was the popular notion in the market? What were the headlines? What was the news flow? What people were discussing? That is important to contextualize. So when it was 8,700, the general feeling was that most banks will go bankrupt. You remember within 3 days, RBI came on TV and announced a moratorium for non-performing loans. Why did they announce a moratorium? Not because they love the borrowers. They announced a moratorium because they know that people will not be able to pay. If they're not able to pay and you recognize as an NPA, you will have to provide from the capital. If it continues for some time, the entire capital gets wiped out. So banks will go bankrupt, correct? So they announced a moratorium. So what was the expectation? Expectation was that most banks will get wiped out. And that time people believed it because before that, all these Yes Bank, India Bulls, DHFL and Punjab Maharashtra Cooperative Bank, all of those things had already played out. So people believed it. So when Nifty was 8,700, people thought case fatality rate will be 5%. Vaccine will take 10 years. Most banks will get wiped out. We all will be sitting at home for 2 years. That was the expectation. That was the worst case scenario. We thought अभी हम लोग ही डायनासोर है, दुनिया खत्म हो जाएगा. That is what was the feeling. Did any of the worst case play out? Did any of this worst case scenario actually happen? So in February 2020, Nifty was 12,490. On 4th November 2020, it again crossed that level. In about 7 months, it completely recovered the previous high. That's why I said you should not be counting from the bottom of COVID. And if you want to count that way, I have even more shocking examples for you. In 1 year, it is up by nearly 50%. Because last year, China was supposed to attack Taiwan. We were supposed to have World War. Nifty was 17,700. It is up nearly 50% now. 2 years back also, we were supposed to have Third World War. In May 2022, Nifty was 15,200. From that level, it is nearly 65 to 70% up in 2 years, right? So every time if you count the market from the lowest point where it is pricing in some of the worst case scenarios, and then those worst case scenario doesn't happen, you cannot take that as a fundamental reference point. You will always draw the wrong conclusion. It went there temporarily because there were some fears. Some people capitalized on the fears, some people missed out. But you cannot take that as a reference point. So look at it this way. If you see before COVID, after COVID, Nifty was 12,500. And you know, here we have some data. Sometimes my team uses Sensex, so we'll put it here. So I was quoting in Nifty terms, look at it here. This is September 2019. 6 months before COVID, 38,000. 6 months after COVID, 38,000. Right? And see the earnings. September 2019, Sensex EPS was 1500, 2020 it was 1600. Now see the whole 5 years from 2019 to 2024. What has happened? In 5 years, Sensex compounding is 17%. Nowadays we are following total return index. You know, you should. You add the dividends. Sensex is 18% CAGR. In 5 years, Sensex total return index is 18% compounded. In those 5 years, the earnings of Sensex companies has gone to 17% compounded. So if you look at the large cap index, if you look at Sensex, it has gone up as much as the earnings. See, till now I'm not trying to tell you forecasting the market. I'm only trying to tell you that market has gone up for a reason. Correct? Now move forward. See, what my request is, last 25 years, whoever has seen the market, you see it in 3 parts. First you see this, correct? Sorry. There are 3 parts in this. You look at 2001 to 2008. You look at 2021 to 2024. And then you look at this period in the middle. This part. Now here what you can see a steep, you can see this moving up. The green colored bars, they are the earnings of Sensex companies. And the blue line is the Sensex, correct? What do these green bars show you? The green colored bars tell you that the earnings has risen up very sharply, correct? Same thing has happened here also. Here, if you see 2002, 2001 till 2008, this is also a sharp move. Of course, the numbers are lower, so those buildings are shorter. But from 2001 to 2008, the earnings has quadrupled. 2001 to 2008, the earnings of Sensex companies has gone up 4x. It has quadrupled. In last 4 years, it has gone up 2x. Correct? Now see this period in the middle. What is happening here? Anybody can see? What is the earnings growth in between? It is flat. Okay. Now same thing, we'll break it up. There's a lot of detailing here. I don't expect you to read everything, but I'll share a few highlights with you. Correct? Now look at this way. If you see 2005 to 2008, see the first part. What does it say? GDP growth in the country 8% throughout. Then 2009 to 2013, what does it say? 7%. Then 2014 to 17, what does it say? 6% going to 8. 18 to 20, slow down to 7%, ending with 4%. 21-22, negative impact of COVID and then a recovery. And 23 to 25, 8% forecast. Correct? This is last 25 years, this is how the market has moved. Then you see second part, fixed capital formation, meaning capex and investment in the economy. Here, average 22%. Here, average 14%, 9% in 2009. Average 7%. Average 10%, slow down to 3%. Negative. And now, 14% fixed capital formation. Now see the last part. Nifty earnings growth, 25%. 9%, 3%, minus 4%. You understood? So basically what has happened is, market has moved in line with the earnings. From 2001 to 2008, earnings went up 4 times, index went up 6 to 7 times. From 2010 to 2020, everybody was buying only HDFC Bank, Asian Paints and Bajaj Finance. What is the reason? The reason is this, because of the economic performance. And in the last 4 years, what has happened? Again, there is a broad-based growth. So what you need to understand is that market is not, sometimes people give things like, it is going up because of liquidity. It is going up because of central bank's expansionary policy. All this is just, people who have missed the bull run, they give these excuses. People who miss the bull run, they say things like it is going up because of liquidity, it is going up because of loose monetary policy. Have you ever seen a market going up without liquidity? If market is going up because of liquidity, the people who have the liquidity, has somebody put a gun on their head? Has somebody forced anybody to put money? Is there a gun on anybody's head? Right? So market ultimately follows some, in the short term there is a lot of noise, but ultimately it is following some logical pattern. If the earnings are there, market goes up. If the earnings don't deliver, the market becomes slack. If you see in the last 3 to 4 years, after the bottom of COVID, earnings growth was 19%. In the next 3 years, it is forecasted to be 14%. It is not a big it's not a slump. From a low growth, we had a big growth. Now we are averaging. Correct? So first thing, stop thinking that market is just going up, there is some bull run, it is too expensive. That is not our job. Our job is to manage the client's portfolio and the risk in the portfolio. Correct? So that's why I said 3-4 times. The risk is in the portfolio, not in the market. Market is doing what market has to do. You focus on the client's portfolio, don't focus on forecasting the market. And market is going up because our economic performance has changed quite completely, quite dramatically. Nowadays, if you follow TV and all, or newspapers, there are a lot of articles which says that, oh, there are a lot of young people who have entered the market. All these fellows have come after 2020. They have not seen correction in the market. If the market falls, they all will run away. You heard this? I think our problem is not that young people have not seen a correction. Our problem is that experienced people have forgotten what happens in a bull run. That is bigger problem. Because anybody today who is below 40 years old has never seen a bull run. 2002 to 2008, how many people have seen? Anup has seen. He became a big businessman in that period. 2002 to 2008, few people have seen. Most people have seen 2010 to 2020. Every time market goes up 2,000 points, corruption, 2G scam, coal scam, government change, commodity price crash, oil is $28. Then there is demonetization, GST, RERA, then ILFS, then long-term capital gain, then Yes Bank, DHFL, then COVID. So people have seen that only. 2010 to 2020, people are taught every time market goes up 1,000 points, oh, bahut ho gaya. Right? There is no such rule. It will follow the fundamentals. So far, And also remember, when the fundamentals are good, it is basic human nature to extrapolate in the future. So unless there is any accident, market will keep rolling over in the future. And accidents by definition we cannot forecast. That's why for the nth time I'm saying we should focus on the client's portfolio, not on the, you have to manage the client's portfolio, we have to beat the index. That is what we have to focus on, correct? Last thing which I want to tell you, this is all about, the broader market, but clearly there are some things which have gone up a lot, right? Because we also have to look at relative value to beat the index. So there are now, this is the last slide. If you see on top, there are all the, large cap, mid cap, all these indices. If you see on the bottom, there are all the sectoral indices, okay? Now, we'll circulate the presentation. You don't need to worry. It's freely available, correct? So in the bottom, there are all the sectoral indices. On the top, there are broad indices. Now, look at 3 years and 5 years. 3-year return of Nifty is 15%. 5-year return is 19%. Previously, I showed Sensex. It was 18.3. That was Sensex TRI. This is Nifty TRI. That's why minor difference, right? But see this. Last 3 years return of Nifty is 14.9%. And last 5 year is 19%. Now, all the things which are on the top, see here all these green things. The green colored indices, all the indices for whom the data is green here, they have given returns 2, 3 or 4 times of Nifty, correct? And all this downstairs, IT, financial services, private sector banks, high governance, ESG, healthcare, FMCG, all these things which are red here, they have given return compared to Nifty or lower than Nifty. So what has happened is, Nifty return is line with average or above average. There are some sectors which have given return 2, 3, 4 times of Nifty, and there are some sectors which have significantly underperformed or struggled to be with the Nifty. That is how market will work. Now see what is happening. When everybody is waiting for a correction, now see the return, now see this. Now forget this 3-year, 5-year, now you look here. Look in the middle, 3 months. Look at this, since 52-week high. Now what is happening? Everybody is waiting for correction. But Nifty is continuously 24, 25,000, no correction. But see this, in last 3 months, which is the best performing sector? Last 3 months, which is the best performing sector? Last 3 months, best performing sector is IT. Last 3 months, best performing sector is IT. Last 3 years, worst performing sector is IT. Last 3 years, best performing sector is defense. Last 3 months, worst performing sector is defense. So what has happened? Now think logically. Everybody is waiting for correction, correct? If certain sectors where you have invested, like PSU Bank, PSUs in general, defense companies, railway, infrastructure, all these things, all this shipyard and everything, right? Shipbuilding, infrastructure, defense, all of these things. Everybody is waiting for Nifty to fall. I don't know when it will fall, leave that aside. If you are waiting for Nifty to fall, but in the meantime, the sectors where everybody is investing, those sectors fall 20%, and sectors where nobody is investing, that goes up 20%. Is that a correction or not? See, in the market, there are many times when corrections are relative in nature. If you see here closely, what you will find, everything which is top performer of last 2, 3, 5 years has become red here. And everything is red here has started coming on the top here. So there is a big rotation happening in the market. And that is simple here. See, people follow value and quality. You see on 3-year basis, the value return is 2 to 3 times of quality. In the recent times, 6 months, 3 months, 1 month, quality return is more than value. It has become reverse. So what we have been doing, we have been launching all thematic funds, but we are launching all the thematic funds which are red here. Why? Because there is a proverb in English. What is that proverb? The proverb is, I don't know if it is a proverb, you assume I have said. You have to shoot where the rabbit will be. I don't think anybody has experience of shooting rabbits. There's one guy in Bombay who is in trouble because of shooting something. So don't go into that. But just focus on the proverb. The proverb is, you have to shoot where the rabbit will be. Today what people are doing, they are shooting where the rabbit was last year and waiting for correction. Correction is already happening because where you are shooting, that is falling that is falling. And what you are not willing to look at, that is actually going up, right? So these are the things I wanted to share with you. Just quickly, I'll recap. Don't waste your time forecasting the market. And in our profession, never tell anybody that market has gone up a lot, it is going to fall. If you do that, you will not be able to work. You will only be focused on kabhi girega. Abhi mera इज्जत का सवाल है, kabhi girega. Right? Don't do that. Second important, and any victory you get by saying that is going to be temporary victory. Not going to help. Second thing I told you many times, the risk is in your portfolio, not in the market. Third thing, market has not gone up as much as people make it out to be. Anytime somebody says, the market bahut upar gaya, my conclusion is they made more money than what they expected. There's no other conclusion I draw out of it, right? And last thing is, every year correction happens, every alternate year new high happens, correct? There is already relative correction happening. You see where the client's portfolio is and bring the ball in the center of the field, correct? Thank you very much for listening me out. All the best to you.
Thank you, Aashish ji, for that wonderful, lucid presentation. Kindly stay there, sir. In fact, all of us got a little trepidated when you just walked in and showed the presentation. By reading, we thought, "Arey sir, Aashish sir is going to do a market outlook presentation." But then you just proved all of us wrong. The points of what you gave us, the bullet points, that will take us a long way through. And now can I have the privilege to have on stage Mr. Ranjit Nair, Zonal Head South of White Oak Capital AMC. Mr. Naveen KG, Regional Head Kerala. And Mr. Abhilash KT from White Oak, Kochi. Now we'll have a lucky draw sponsored by White Oak. Can we have the lucky draw coupons, please? Mega gift from White Oak Capital. Again, the rule stands. The person should be available in this hall. Okay, this is token number 072. 072. So kindly stay, sir. We have a very special request. Can we have Jagdish Pai, President AIFA India, on stage? Can we have the General Secretary of AIFA India, George Jacob, and the Treasurer Sajid to kindly come forward and join Aashish ji and team on stage? The AIFA India wishes to recognize the presidents and secretaries and treasurer of each of the AIFA chapters. The AIFA is the only association of MFDs in Kerala. We function by having chapters all across this state, and every one of them have really worked hard and still working hard for the betterment of the MFDs. So it's only right that they get awarded from your hand. So can we have, I will call everybody, please, all of you come to the stage and we'll be having the award ceremony immediately after that. From Trivandrum chapter, calling Binu Varghese, President. Prashant Krishnan, Secretary. Mr. Jitin, the Treasurer. From Kottayam Chapter, Madhu MS, President Abhilash Kurian, Secretary, and Mr. Anil Kumar VK, the Treasurer. Calling Mr. Ramachandran from Ernakulam Chapter, President, Srinath Prabhu, and Mr. Suraj. From Calicut, can we have Mr. Srijit VP, President, Mr. Basant, the Secretary, and Satish TV, the Treasurer. Mr. Binu Vagis from Trivandrum. Prashant Krishnan. Mr. Jitin from Trivandrum. Kottayam. Madhu from Kottayam. Anil Kumar VK from Kottayam again. Yeah, Mr. Ramachandran from Ernakulam. Suraj from Ernakulam. Mr. Srijit VP. Mr. Basant. Basant from Kozhikode Chapter. And Mr. Satish, again from Kozhikode. Srijit VP, please come running. We are waiting for you. Srijit VP, the President of AIFA Kozhikode. Can we have Ramakrishnan Manghat, President of Thrissur Chapter? Arun VA, Secretary of Thrissur, and Richie Palathingal Varghese, Treasurer of Thrissur, to also kindly come to the stage. Sorry sir, I missed out calling Thrissur. This is Ramakrishnan Manghat, President Thrissur. Richie? Okay, thank you so much. Aashish ji, one sec. Can we have Jasmine Claire Bayer from AIFA Ernakulam Chapter to kindly come forward and hand over a token of our love and appreciation to Aashish ji White Oak and Ranjit, and also to Naveen.